Hey everyone, I'm Vic Jagger with Urban One, and you are watching Chuck's Corner. Dun, dun, dun. Now, was that good? I worked on it. Chuck, no.
Vic is getting better, but we got the off season to work on our game plan for next year.
Well, we are here to help you buy a home before year end and start the new year in your new place. And, you know, this is something that means a lot to me because when I bought my first home, it was like in December. And I told you I was laying on the floor, no furniture, no nothing, but it was mine. And so we're going to get real about what it takes to go from dreaming of your home to buying your first home or that vacation home and holding the keys right in your hand. And of course, I'm your host, Vic Jagger, and I'm joined by Chuck Bishop and Ernest Campbell of Wells Fargo.
Hello.
Hello, good morning.
All right, let's talk about it because right now it's coming up to the end of the year. The holidays are coming. Chuck, why does buying a home feel so overwhelming? I mean, I say it's excitement, but a lot of people are like, oh my gosh, there's so many steps. There's such a big process.
Yeah, it's amazing because when you think about what you just said, I want to buy a home before the end of the year. So it's holidays. And it's the stress of the home buying process.
Yeah.
But if we think about where we are today, we've kind of come full circle, right? We started talking about how to prepare for buying a home, the role of the real estate agent, the role of the nonprofits, the role of the loan officer. So we've kind of prepared for this journey, but it's still going to be a bit uncomfortable. Remember, you're dealing with three things that are critical to you: your money, your shelter, and your family's protection. So you have to be emotionally invested in this. But there are ways to minimize that stress. And we talked about that. And it's all about preparation. You've been juggling your credit, juggling your finances to get ready for this point. Hopefully you have taken the tips that we laid out there to heart. You have started to plan. You have broken it down as a project so that you don't try to do everything at one time and become overwhelmed. So is my credit okay? Is my savings okay? Am I consistent with my employment? Have I talked to a home buyer counsel to make sure I'm ready to buy? Have I interviewed my loan officer to make sure I'm comfortable with the loan officer I'm going to use? So there are so many things that we've done that will help de-stress this process. So it'll be a little anxiety, but we're going to help our customers manage through that process.
I love that. And, you know, just preparing yourself, Ernest. Let's go to point A, starting point. What should one do if they want to buy a home before the year ends or soon after?
Yeah, well, contrary to belief, you don't start looking at houses first. And
Right.
That's, in my 24 years, that's, kind of the stigma that people have when they get ready to buy. They start looking at homes. And
That's the fantasy.
That's the exciting part about it.
Yeah.
You don't have to speak to anyone just to stop by an open house. And that's great. I think it gives you inspiration. But really, you need to sit down with a mortgage consultant before you do anything else. Let's check your credit. Yeah. Look at your financial situation, see what your debt to income ratios are. How much can you afford? It doesn't make any sense for you to start looking at $500,000 homes when maybe your first home may be $250,000 or $300,000. And so once you at least sit down with a mortgage consultant and create a plan, create an action plan of how long it's going to take, what you need as far as cash down, what neighborhoods, all of those things will come after you get pre-approved. So that would be my first recommendation, is to sit with a mortgage consultant, get pre-approved, find out what you can afford, what your buying power is. And then when you're going out there with that pre-approval letter, you're a much more viable buyer before you start sitting in a realtor's car and burning up their gas.
Okay. And that's the superpower, right? Yeah. When you have that pre-approval and you're like, you whipping out the paper like, oh no.
Can't wait to show it to somebody, right?
Yes. And, speaking of that superpower, it's something that, you have to tap into when you're going into this process because it is a process and there are steps that you have to take. Chuck, talk about the stress and how to avoid it being a stressful process, because I'm not going to lie, first time home buying is scary for a lot of people. So how can you minimize the stress of going through that process?
Yeah, I think one of the keys is what Ernest just said, and that is, doing your due diligence ahead of time. So we talk about the preparation that's involved. Mm-hmm. I mean, the home buying process is not going to be quick. It's not going to be, well, I found a house, I'm going to go closing next week. And quite honestly, the ease of the home buying process is typically based on the amount of preparation you do before you start to talk to a loan officer. So again, understanding what your credit looks like, making sure your savings is right. If you're not sure and you don't want to talk to a loan officer yet, because some people are apprehensive talk to a homebuyer education counselor. There's a difference between homebuyer education and homebuyer counseling. Okay, one is a more prescriptive, elongated process to really teach you about home ownership. The other one is just a 4-hour class you typically get to get a certificate because some programs require it. But again, preparation prior to meeting with loan officers, because Ernest wants you to talk to his team when you're ready to go. If you're not ready to go, they will help you, but there's only so much they can do. As a loan officer, they're going to have to turn you back over to a professional who's skilled at credit repair, debt management, other things. So again, the prep will help de-stress the process by investing early.
Yeah. And Ernest, there are so many loan programs out there. So how does a home buyer decide what's the best program and what's right for them?
Yeah, well, just piggybacking off of Chuck, just something that popped in my mind. My college basketball coach used to tell me, proper planning prevents poor performance.
There it is.
Right, so I
think I've heard that before.
Preparation a lot. That's a big key to it. And again, it goes back to meeting with that mortgage consultant, because no one program is a one-size-fit-all. Everybody has unique and different situations. That's one of the things I love about being in this business 25 years is there's no one situation that's alike. And so you get to customize what is best for that particular buyer, whether it's FHA, VA, USDA, conventional, jumbo, believe it or not. There's a lot of first-time home buyers where the average age has moved above 40 that people are deciding to buy homes. So they're buying bigger homes. My first home was 70 grand. You don't see that. Well, for one, it's not available.
Where?
But for two, people are waiting later in life. So they're buying larger homes for their first entry point. So again, it really is important to meet with that mortgage consultant to see which product is best for you. And some people may be on the borderline of one product or another. And so you really don't know till you sit down and have a customized solution with a consultant.
And we're in a day and age where there are a lot of small business owners, a lot more entrepreneurs. And so if someone is self-employed or they have non-traditional income, how do they navigate that process?
Yeah, so there's going to require a little bit more documentation. They're going to have at least a 2-year history if they're self-employed. We do see that a lot of folks are coming out of working in corporate America or having a W-2 job and transitioning maybe in that same field to be an entrepreneur, and that's fine. We support that. But now we're looking at your tax returns versus your W-2s. The biggest obstacle is you're going to have to bite the bullet and pay some taxes, most likely, for you to show income. I know a lot of entrepreneurs want to have as less tax liability as they can possibly have, and I get that part. But the counteract to that is you got to be able to show enough income on paper to sustain a mortgage. So, consult with your CPA. Obviously you have conversations with your mortgage consultant. When you're thinking about buying by the end of the year, that may not be something that's feasible because you need that tax return from 2025 because you need to show that income. So maybe that's a more spring buying season. But that's why you start now. Start having those conversations with your CPA now about where you need to be from an income perspective based on, because what we're going to look at is a 2-year average for someone that's self-employed.
So if my TikTok started blowing up right now, I just started making a lot of money. I can't just go out and just try to get a
you got to file that on your tax return.
But you bring up a good point, and that is all income sources can be considered. And that's something we see sometimes in the industry. People don't necessarily divulge all the income, child support, and alimony. It can be counted. People don't think about that because they don't think about his income potentially. And since COVID, we've seen so many small businesses start. People are driving, Uber or delivering Uber Eats, and all those things can be used, provided you can prove that you've got income from it. So as Ernest said, we're going to need to see tax returns, but just make sure you are honest with your loan officer and you are divulging all the income sources that are out there that you have.
Yeah, because sometimes they think that they'll get around it. But I will tell you, as you just mentioned, right, when we get ready to do a mortgage, we're going to get all up in your business. So just know, if I came to you, Vic, and asked you, can I borrow $500,000? I'm sure you'd have a lot of questions for me.
I would.
Right, before you would lend me that money.
For what?
So the bank's not going to be any different. When we start looking at your bank statements, for example, and we see that on every week on Thursday, you get a deposit from TikTok or from Instagram, we're going to ask the question of what are these large deposits? And if you're not claiming it on your business return, then we won't be able to use that money. So sometimes people don't think that they're, hiding anything. But by the time we get through doing an autopsy of your financial situation, it's going to come up. It's better to be forthright because your loan officer can help you on a path of how you can use those funds, as well as not only deposits on your bank statements, but debits. Like maybe you have something that you're paying for that's not on your credit report, but you have a monthly payment on a lease of a second home, or you have a monthly payment on something that you're just paying every month. We're going to ask, is that a liability? What we don't want to do is put you in a situation where we only see these debts and you have other debts that aren't disclosed, and now we put you in a mortgage you can't afford. That's going to come back on us. But because you didn't disclose that up front, we don't know, right? If it's not reporting to the credit bureau, we don't really know what other, it's the school tuition, is it your daycare? Like we need to know all your expenses to give you a complete picture.
I always say, count my money, you got to count my bills. So Chuck, if someone is unfortunately denied for a mortgage, it's not the end of the world. But how can they turn that around?
Yeah. I look at denials as not a no, but it's a not now.
Not now, yes.
And so it's a pause in the process. And what that really means is we need to understand what that cause was. There are a lot of reasons. I mean, today we see one of the biggest reasons is either DTI or LTV. So that's debt to income, meaning the amount you're trying to borrow is more than you can afford by income, or the LTV, meaning the home value is more than we can lend against. But there are ways to overcome that. Talking again to your loan officer, to your housing counselor will help you understand if there are down payment assistance programs and other grants available that you don't have to repay that can help drive down DTI and LTV. Homebuyer education early in that process will help you get there. And I know I talk about the homebuyer education a lot, and I don't want people to think that's the only path to homeownership. I think it's a valuable investment of time because, one, it helps improve your opportunities for approval. Two, you meet qualified professionals that not only help you get in a home, but they're there after the home. Post-purchase counseling is really critical. We think about the home buying process as getting in the house, but the reality is the home ownership process is going to be for the next 30 years afterwards, at least, in some way, shape, or form. So we want to make sure we have sustainable homeowners and that they get into houses that they can actually keep. So that's why you hear me talk about the homebuyer education process a lot. But the denial is not a no, it's a not now. It's a let me ask why. Ernest will tell you that the HMC, the loan officer, will work with you to a certain degree, but at some point in time, they may have to hand you back to a professional to walk through that credit journey to correct wherever the deficiencies are, to help you get on a savings pattern. But it's not a no. It's a let's fix this. Let's come back in 60, 90, 120 days, whatever it might be. But it is a path that's correctable if you follow the script.
And I'm so glad that you mentioned that, because when I first bought my home, I didn't go through a home buying education process. There was no one to really hold my hand and walk me through it. And so that's why these conversations are so important, because sometimes people just don't know where to start.
Right.
They don't have a game plan. They don't have a path. And so we're giving them the tools that they can use. And a lot of times, that's just not afforded to you. And so, Ernest, talk about, folks who are ready to buy. Is it possible to get it done before the end of the year? The clock is ticking.
It's very possible, but it's going to be stressful, but it's very possible. When I originated, just in the last 10 years, every year we always had someone that wanted to close on Christmas Eve, and I would scratch my head like, why are you, first of all, putting me through this stress? Why are you putting yourself through this stress?
I think I closed December 20th.
Okay.
So it was like,
you were somewhat kind.
Yeah.
You were somewhat
And
kind.
it was stressful.
So it can happen, but again, it starts with the preparation we discussed. Like, so we're running short on time, right? You need to have a meeting with a consultant today, and you may have to start thinking about some financial decisions. Maybe Christmas this year is one gift. Maybe it's not a gift. Maybe Thanksgiving is going to Friendsgiving and not hosting, so that you can be financially prepared, because every dime and nickel you have as extra funds may be used as a part of your down payment. And this is why it's important to have these conversations with a home mortgage consultant, so they can prepare you of what's going to happen next and the next steps. But a typical closing in this market is 30 to 35 days. So if you're pre-approved and you have your down payment ready and you're linked up with a mortgage consultant and you start to talk to a realtor, it can happen. And there's listings popping up everywhere. I've seen more activity over these last 90 to 120 days than I've seen in the last 2 to 3 years, which is great for us in the mortgage business and great for real estate agents. Folks are finally starting to get off the fence and make a decision of, I know I have this very, very low rate that I got back in 21, 22, but it's time for me to downsize, or it's time for me to move up, or it's time for me to relocate. And so you're starting to see more inventory out there. So right now is a better time than any.
And I think it's important to note that if you are in this home buying process, do not make any big purchases with the holiday season coming up. Do not buy that refrigerator. Don't buy that couch. The car. Don't take a big vacation. Can you talk about why that is important, that there are no big purchases before buying a home?
Yeah, because that could determine whether you're short on cash to close or not, and it doesn't give you as much negotiating power, right? This is still what I would say is a buyer's market, and if you're going in asking for, seller credits to help you meet the gap in your closing costs, then your offer may not be as solid as someone who isn't asking for those credits. And so the more cash you have in hand as a part of the transaction, the better position you'll be to win that offer. And so make those purchases after you get into the home.
Right.
Because that, for us as loan officers, is a brain killer. Like, we go through all this process, we get ready to close, and you told me you had $10,000. I got the bank statement, you have $10,000. And by the way, Ernest, I bought XYZ 2 days ago or a week ago.
I'm in Turks and Caicos for a few.
That could kill a transaction, right? So you got to determine, again, the preparation piece. If this is something you really want to do, there's going to be some sacrifices that you're going to have to make in order to obtain home ownership.
And that is a key word, sacrifice, because it does, the process takes a lot of sacrifice. And Chuck, buying a home is a big deal. I'm just going to say it. It is a big deal. Let's talk about the positives of it. Okay. So for those, a home is not for everyone, right? Some people love apartments and things, but for that person who is excited and who is ready to buy that home, let them know the positive benefits of being a home buyer.
It absolutely is a big deal. Owning a home is likely the largest purchase that an individual or a family will make. It's also likely for many people the start of their accumulation of wealth. Without home ownership, it is tough to accumulate wealth individually. People who own homes have 10 times the net worth as renters. Simple fact. Financially, you have the potential for tax deductions. You have the potential for equity growth. You have the potential for this home to use as a vehicle to finance your small business and college tuition later on in life. There are a variety of things. Those are financial benefits, but there are also social benefits. Kids who grow up in a home of their own are less likely to have significant childhood disease. The graduation rates are higher. The family's engagement in civic and political activities is much greater. You have much greater financial contributions to neighborhoods when they're homeowners involved versus renters. So home ownership not only has financial, tangible benefits for the family, but it's got social benefits for people as a culture to uplift communities and create more longevity to a quality of life. So homeownership has so many values that we don't think about. But more importantly, it's yours. You want to put a cherry tree in the middle of your front yard, go do that.
Yeah. I mean, unless you have an HOA now. Wait a minute.
Unless you live in my HOA, you can't have a fence, but we won't talk about that right now.
Yeah.
But having a home just gives you those opportunities, and you don't have to move.
Stability.
Yeah.
That's the first thing I think about is having a stable environment. We're creatures of habit, and when you can have a stable environment, everything else seems to fall in place.
Yeah,
Absolutely.
And that's everything. And so, Ernest, what advice would you give to our listeners and our viewers if they're still unsure or they're in the very first stages of starting out to buy a home?
Yeah, don't let the theme of today's show, buy before the end of the year, scare you. Like, whoa, by the end of the year, again, like Chuck said, and if you have received a no, that just means not now. But, start the conversation with a home mortgage consultant.
Yeah.
Whatever, company or bank you decide to choose, start with a professional, right? We don't know what we don't know, especially if you're a first-time home buyer. Like, who else can you talk to about something that no one maybe in your family has accomplished? My 22-year-old daughter, we just closed on a condo for her in September, and she's grown up in real estate and mortgage. Like she would go to open houses with me and run around the house and pick her room, and been doing that since she was a kid. I can remember she downloaded the Realtor app, and we'd be in a neighborhood and she'd be like, let me look up this house. She's like 12 or 13.
Yeah.
And so we just went through the process of helping her buy a condo. And there were moments during this process, and I'm in the business 25 years, where she wanted to give up. So without me being that consultant for her, she wouldn't have been able to make it through to the other side. So don't think in this day and age where everything is digital and I'm looking at everything on social media, you still need a person who does this every day to help guide you. Don't try to do this one on your own.
Yeah, it's not
a process.
Not a solo
I
process.
suggest you try to just Google or to try to use ChatGPT, right?
Right.
You need a professional, and it can't be replaced but from a human being perspective. So get with a consultant, map out a plan, and don't put yourself on some tight timeline, right? It could be even March. Maybe you're waiting to get your tax return. That could be a cash event that you're using as a part of your down payment. But at least if you put a plan together, the next piece is hold yourself accountable to stick to it. Again, we talked about sacrifices. You may have to give up Starbucks for 3 or 4 months, right? That may be a contributing factor. But at least if you have a plan, you have an accountability partner with your mortgage consultant, you can get there.
Yeah. And no pressure trying to get it done by the end of the year. It's not like a car dealership where they're just trying to, get all the get all the cars off the lot beforehand. So taking that pressure off of yourself will help and actually have a clear mind into what you actually want to do instead of rushing. Because when you rush, you're going to get something that you may not even really want or have fallen in love with.
We've said it a number of times, and it's never too early to start. So start now, regardless of when you want to buy. Ernest leads all of the mortgage sales for Wells Fargo in the Mid-Atlantic region.
Nice.
He's got an amazing track record, highly successful. We've got tools online as well. wellsfargo.com/mortgage education is a landing page where you can go to get articles, tools on how much I qualify for, but they always will lead you back to the professional. The tools aren't going to take you to this black hole where you don't know where to go next. They will lead you back to the mortgage professional. So as we've said, start today, create your plan, and reach out and talk to the professional who can help you build the path to success so that you take some of the stress out of this process. The only stress you will have is what color paint you want to do for your bedrooms and things, okay?
You're inspired a song. Reach out and touch. No, but the holiday season is pretty much here. And if you do take a moment to appreciate the journey, it will make your path more special, whether you're just starting out or this might be your second time around, because the second time is always a charm in my book. At least for me it was.
They're never the same, right, Ernest?
No.
I don't care how many times you do it. I've done it a couple times and they've never been the same.
Yeah.
And things change, right? We've got folks who haven't bought a house in 7 or 8 years, and they're trying to base their
First
process
experience,
on what it is today. And it's, we have to have tough conversations about what it takes today versus what it, took, 8 or 9 years ago. And I've been doing this 25 years. So the process changes, which is, I'm not expecting you to be the expert on it, which is why you need to consult with a professional.
There it is. Chuck, give them the website one more time.
It's www.wellsfargo.com/mortgage education.
Thank you, Chuck. Thank you, Ernest. And make sure, if you are even thinking about buying a home, check out our previous videos. And if you have any questions, reach out to Chuck or Ernest, since he's